Well, what is going on, guys? Luke here today, and we need to talk about Apple's incredible earnings call. So I'll give you my takeaways from the earnings call and the two big reasons why it traded down afterwards. And honestly, the second one is not getting near enough attention, and it should. So I will tell you exactly how I'm dealing with that problem, as it is imperative you are ready for what's next. So let's have some fun and make some money today, and all I ask for in return is that you ever so gently just caress that little like button down there till it turns blue. Although, wait, some of you guys told me it didn't turn blue. Anyways, just, tap the like button and, make sure you're subscribed if you haven't already. So Apple just completely destroyed their earnings call and delivered an incredible quarterly and a year-over-year performance. And here, just for some context, let me give you some numbers. Now this earnings call, the Wall Street consensus was Apple was expected to make $1.41 per share, but they ended up with an earnings beat of $1.68 per share. Gross margin increased to 39.8%. That's just a crazy high number. But it gets better. Revenue was up at $111 billion. Yes, that is correct. They finally crossed the $100 billion mark by $11 billion. Sales for every product category rose by double digits. Every single category. This is why I completely believe if they choose to jump into EVs, it will be huge and it will completely succeed. Apple just does not do failure. If it cannot be a wild success and extremely profitable, then they're just not going to do it. So if they choose to do it, look out, it's going to be awesome. Oh yeah, and Tim Cook kind of lamented the fact that COVID restrictions actually hurt the bottom line more than expected. Really? That's hurting the bottom line? There is no better all-around stock in the stock market, period. You want share growth? This stock has nearly doubled in the past year. You want unbelievable revenue growth? They have that every quarter. You want products that people cannot live without? Well, look at new iPhone sales. You want recurring revenue? They have that with over 600 million paid subscriptions, and that number is growing massively every quarter. There are lots of great stocks out there, I'm not saying that there's not. But only Apple can compete in every category on the balance sheet with the best stock for each category. Oh yeah, and they pay a dividend too to boot. Come on. Now we all need to slow down before we get too excited and buy every share that we can and just sell everything and just buy a bunch of Apple. The stock fell afterwards pretty sharply, and we need to talk about why. And yes, there was more to it than just the chaos surrounding GameStop and Wall Street bets and all of that. Remember, that's a completely side thing all on its own. So why did Apple not explode and instead went down? I think there are two big reasons why it traded down afterwards. And we've discussed the first one before, but big funds, large investors, and all the big guys rarely make their moves after earnings calls unless there is a major surprise, either good or bad. If they were looking to buy Apple, they took the calculated risk and bought way before the earnings call. And let's be honest, Apple has been on a tear the past couple of weeks or so before the earnings call. So that raises the question, how much was already priced into the stock? And I would pretty much say that, Wall Street priced in all the good news already. And that's why we didn't get a bump up, but instead it traded a little bit down. But the second reason Apple traded down is much more concerning, as I believe it's kind of the first crack in the larger facade of the market. The market has basically been on overdrive now for almost a year. And again, I'm not referring to GameStop and all of that. That's a completely separate movement altogether. I'm talking about the shunning of great stocks like Apple, Microsoft, and others, and money pouring into speculative plays. Even Tesla seems to be shunned by investors chasing unrealistic and unsustainable gains. This is typically the sign of the market getting too frothy, and it never ends well. When celebrities who have no business giving stock tips are giving stock tips, and they're actually making money with their picks, to me personally, that signals that we're getting near or we're at the peak of a market run. Kind of like the classic story of the kid that shines shoes and giving stock tips. That's kind of pretty much where I feel we're at right now. So knowing that, what am I doing in response with my Apple stock? Well, personally, I think there is no shortage of catalysts coming for Apple stock this next year. And you also have to keep in mind frothy markets can last sometimes years. So you cannot afford to not invest and miss out on great deals in between. And I'm always looking to add more Apple stock. I added on the dip in early January, but you need to understand where we're at in the cycle and know that it could dip 10 to 20% if this correction continues, or if there's a bigger problem with the market. And on the flip side, it could run up further, as I think stimulus checks and cheap money will keep the music going a little bit longer. That's just the reality of where we're at in this market right now, and dollar cost averaging is how I've always bought Apple stock. And in regards to selling, I will not be selling any because you cannot time the market and I don't want the tax bill, to be honest. I sold some of my Apple shares in the early 2000s and asked me how much more money I would have if I would have kept those shares. It's a big number, it hurts. But if you have the right mindset and you are long this stock, this price today will look cheap by comparison in a few years as there are many catalysts on the horizon. And remember, if everything goes south with the entire market, the sell-off is always basically an overreaction, which basically just means a chance to go discount shopping and average down on your price if that happens. And that's a great spot to be in, being able to average down in your price on a stock. That's how real wealth is built in the end. So thanks for watching, and make sure you subscribe and tap that little like button, and we will see you in the next one.